But what we're going to do now is kick off with a keynote speech, and it comes from Craig Welsh. Just to tell you about him, Craig is the Chief Distribution and Marketing Officer at Westfield Group, and he's going to be discussing the key distribution trends that are happening, how carriers can stay up to date in a world which is rapidly changing, and also what the insurers should prioritise over the coming years. Also, as well, as a heads up, he's going to be taking questions, so please do make sure that you put the app onto your system. If there are any questions that you want to put to Craig, you can do that at the end of the presentation. But in the meantime, could you give him a big, warm welcome? Craig Welsh, the stage is yours.
Thank you.
Thank you.
Thank you. Good morning, everyone. Great to be here. Great to be back in person, and great to cover this topic. I think when we think about innovation and we think about the impact of InsurTech and what we as an industry are trying to solve for, certainly I believe that so oftentimes this topic is at the center of all that. I think it can also be a highly controversial topic because people have biases, people have expectations on what will happen. And I've been on webinars, and one of the classic questions is, in the next 10 years, how much of P&C insurance will be written direct? And I was on one of those webinars recently, and the response was 60% of P&C insurance will be written direct. And I asked the question to the audience, do you know how much is written today? And are we talking about personal lines? Are we talking about SME? Are we talking about large commercial and so on? So there's complexity to this topic. And a couple of maybe foundational things to get us started. And then I'll leave you really with 3 questions. So if you thought I was going to solve the future of insurance distribution for you today, you're sadly mistaken. Don't leave. But I wrote pages, as I prepared for this, thinking about the future of insurance distribution, and I whittled it down to 3 main points that I think we should be asking ourselves. So I'm good on stage. I'm even better over a beer. So if you want to talk about this topic at Luke's, that's where we will solve for the future of insurance distribution, okay? But a couple of foundational things. One of the key challenges and opportunities for our industry, carriers, distribution, partners, is to be customer-centric. And I believe that some of the legacy baggage in our industry is we have not always been customer-centric. I can speak from a carrier perspective. We've done many things over the years, putting the agent first. And I'm not saying that's necessarily a bad thing. We have an agent in the room. But at the end of the day, when we talk about increasing customer expectations, when we talk about the changes that we're dealing with, we have to be a customer-centric industry. And we have to push that way. And I can share 2 recent examples, that kind of were aha moments for me that both occurred in the past 5 years. There's a large insurance conference every year, CIAB, for those of you who know the Council of Insurance Agents and Brokers, the largest agencies and brokers in the country. You have to be at least 10 million of revenue to be a member. They have a large conference every year. ILF, the Insurance Leadership Forum, every carrier is there, every reinsurance partner is there, and the leadership of the largest brokers are there. And it's a fascinating 3 days. It's speed dating, but in each meeting you start to pick up what people are focused on. And there's usually a trend. Data may come up, and then every broker talks about data. Well, about 5 or 6 years ago, the topic was small business. And I was involved in 19 conversations where we talked about small business and what the agency was going to do and what we as a carrier were going to do. And it was going to mean more compensation for them and higher efficiency, and you need a service center, and in 19 conversations, not a single thought about the customer. Like, how is this going to be a better experience for the customer? In the 20th conversation, after we talked about compensation expectations and service center and what we're going to do from a digital perspective, an agent said, and we think we can deliver a better experience for the SME customer. And I was like, hallelujah, right? That's why we're all here. The other example I'll share is TrustedChoice.com. I'm not sure if anybody's familiar with TrustedChoice.com, a little bit of an InsurTech firm that was founded through the independent agency system Goes back about 7 years. The independent, the Big I, the Association for Independent Agents saw the internet as a threat, and they, in mass, they wanted to bring, small to medium-sized agencies into the internet. And for many of these agencies, first time that they've taken digital leads of customers, right? They're used to referrals. And so we used to listen to the phone calls. The phone calls would come in, and you would hear how a service staff would handle that phone call. Now, they're innovating, right? They're bringing digital leads in, but more times than not, when we listen to the account manager take that call, they were doing everything they can not to sell that person insurance, because it's not what they were used to, right? They were used to service, right? They weren't used to sales. And there was one call that young man called in. His mom and dad had their business insurance and their homeowner insurance with this agency, and he was buying his first house. His dad told him to call the agency. He was closing on Friday. This was Monday. And basically the account manager said, if you haven't heard from me on Thursday, give me a call. So she put it back on him, right? It's like, you're bothering me, now I'm going to have to service another policy. Customer centricity, right? Customer centricity. We've got to put the customer first. And I would say in some situations we have work to do. We can also sometimes get all wrapped up in direct and MGA and large agencies and small agencies and captive agencies and independent agencies. And there's complexity in what distribution looks like. But I think for purposes of today, if we stay centered on two things, right? Human-aided customer service, when we think about distribution, right? When is a human involved, and when should we allow the customer to do it themselves? And it will vary by class, it will vary by type of customer, right? But kind of, forget about direct, forget about captive, forget about all those things. Really, from a distribution perspective, when can a human add value, and when should we allow the customer to do it on their own? In one of the earlier sessions, they talked about, human experiences are for extraordinary items, and digital experiences are for ordinary items, right? So regardless of what channel we're in, let's think about those two things. A few questions to think about as we think about the future of distribution. Now, for me, I'll share my bias. We do 100% of our business through agencies. Are we exploring other channels? We are, certainly. But I spend a lot of my time every week with agencies talking about what they're doing today, what they're solutioning for the future. But I think one of the first questions as we think about the future of insurance distribution is, have we gotten right what the customer expects today? Do we really know what the customer expects today? And there's some recent lessons that we could learn, right? Full tech, insurtech carriers, right? Who went, 100%. The experience for the customer is digital online, A to Z. Customers don't want to talk to anybody. And I remember talking to some of the early insurtech firms, 5, 6, 7 years ago, who said customers don't want to talk to someone, they want a digital experience. And what did they find, right? They found the person who goes online, sometimes to buy auto insurance or sometimes to buy homeowner insurance, wouldn't go from A to Z, they'd go from A to E. And then they'd have a question, right? What about my boat? What about my package, right? What does that look like? And then what happened with some of the full tech insurtech carriers, they started to go to agencies. A little bit difficult when you look at some of the comments that they made, but part of it was, they needed to capture a customer with higher economic value, right? The person who comes online just to buy auto insurance and state minimum limits, maybe we don't need a human experience there, right? Maybe that has to be a fully digital experience, right? But again, thinking about this, from that perspective, right? Have we gotten it right in terms of what the customer expects? There's a couple reports that I usually look at. Gartner actually did some research through COVID, and they looked at the insurance value chain, because distribution isn't only the sale, right? I mean, I think that was part of the lesson is everybody was focused on the sale, and the sale is one part. But what happens with claim service? What happens with billing problems? What happens when something else occurs? Right? It's distribution's not just the sale; it's servicing that customer full cycle. Some lessons clearly. that we've learned as we've gone through this process. I think the second question to ask ourselves is, are we innovating from the inside out? And maybe a connected question to that is, can we innovate from the inside out? If you look at the value of distribution inside the entire insurance ecosystem, right, all customer service, there's tremendous value in distribution, no doubt. You can look at M&A, you can look at multiples that are being paid for distribution. If you think about the future of distribution, just ask these private equity groups, right? They are clearly investing in the future of distribution in a big way, but there's tremendous value in distribution. And if you look at one of the trends, clearly what we're seeing is, within distribution, small agencies, mid-sized agencies, large agencies, carriers working alongside, trying to figure out for the digital, what's digital and what's human. The industry is innovating from the inside out, both carriers and also current distribution, and they have the dollars to do it. And you can look at, some of the largest brokers in the country today and look at the investments that they're making, right? And look at what they're willing, the capabilities that they have, right? As you look at the future of certainly distribution, as a carrier, one of the potential threats is, are we disintermediated, right? If you have all the data and you have ownership of the customer and you have capability as a broker, and you can get access to capital, then why do you need a carrier, right? If you can provide service in some other way. But, I think the second question is, the future will look different. The future needs to look different. And is the industry, is distribution innovating from the inside out? And I think there are many examples where you can see it. Even embedded insurance, right? Embedded insurance, very hot topic now. I would say embedded insurance has been around for a very long time. But think about Amazon's big announcement, right? Embedded insurance offering coverage to their marketplace members who need liability insurance. How is that delivered? Through Marsh and a panel of carriers, right? Innovative, right? But it took, current infrastructure to certainly deliver that. Tesla, another great example of embedded insurance. Tesla took an existing MGA, to be able to deploy insurance, and actually is working in Texas. I know they're working with a county mutual. So, very different thinking in terms of how it's delivered. But I do think there has to be this question as we look at this, how is the industry innovating from the inside out? Because it is happening. It may not be happening everywhere, but it is happening. And I think increasingly, it certainly needs to continue to happen. The other opportunity connected to this, and for those of you who are in the earlier conversation about the future of insurance, and I think that not only carriers, we talked about the future needs in terms of evolving risk. We talked about the future needs in terms of how do we deliver for things like cyber, how do we consider things like climate change. People today, businesses, families, individuals, face risk like never before. And much of it is not insurable by a standard insurance product, right? But it's not only carriers who can solve for that, but think about distribution. Think about current distribution and what their potential capability is. And again, going back to, we all need to be customer-centric. When carriers and distribution get together, we've got to be talking about the customer increasingly. We've got to make investments alongside of each other. But distribution can play a significant role there. The last thing that I would say is, and this is a question that I would ask of all of you, given this landscape, given the way that distribution is emerging, given the value there, given what we all have to solve for, what are the capabilities that we start with, right? What are the capabilities that we start with when we need to deliver on, that promise, when we need to deliver on increasing customer expectations? Where do you start? The capabilities are out there. There's no doubt the capabilities are out there. Just walk across, the aisle here, and you will see all of the capabilities. And I think the challenge for all of us is, it's in making the commitment and getting started. Because the future of distribution will look different. It looks different today, but where do we start? Does anybody in the room know Adrian Jones? I don't think Adrian is here, but he's a great follow from an InsurTech perspective. He's on LinkedIn. He's very generous with his content. He's an insurance insider, comes from a reinsurance background. He now runs the InsurTech practice for a capital management company. And he talks about, one of the lessons of InsurTech over the past 7 years is we tried to make big moves. We tried to move in miles, and people try to get rich quick. And this is not a get rich quick industry. But he said insurance is a game of inches, and you have to move inch by inch all the time. So you always have to be moving. You can't stand still. So you define distribution, carrier. When you think about this landscape, where are we starting? How are we going? I think the last thing that I would leave you with, particularly carriers in the room, or vendor partners, or certainly distribution. The problem, I think, time and time again, is not technology. The problem is not capability. It's people and leadership. It's people and leadership. I can show you many distribution partners who have been investing in InsurTech over the past 3 and 4 years. And what many of them have said is the behavior change is really hard. The technology investment, I'm not saying it's easy, but the behavior change that they have to push people through is very hard. I can think of 7-figure investments in data, made years ago, and we're going to optimize, we're going to have better flow, and we're going to understand each other's appetite. I mean, really simple things. It's 2022, and we're still trying to make efficient flow of appetite. And distribution partners, 7-figure investments in data, and still don't have anything to show for it. So technology, move inch by inch, but the people and leadership perspective, as we look to the future of distribution, I think the winners and losers, and it may take a very long time, I think those will be the factors. So thank you. Again, if anything that I said trips a thought, I'll be at the bar at Luke's. Always good at a bar. I'm a distribution guy at heart, so.
Does that mean the drinks are on you?
Right. Well, I won't go that far. So.
In which case, we'll all be at Luke's.
Maybe it's the after Luke's party. That'll be on me. So, questions?
Yeah, we do have a question. I'm afraid I can only squeeze in one because for various reasons we're falling a little bit behind time. But get your thinking cap on. In a world where FinPros are feeling like they will be replaced by big carriers and big tech, how do carriers balance that both are interested in the shared end customer, but can scale and service the 80% book of business and leave the top 20% for exceptional human/FinPro exp?
Oh, softball, huh?
I was never going to make it easy for you.
Yeah.
You know that.
Can I say it depends? So is the core of the question. I think it's, as we think about technology and as we think about advances in technology, and we didn't talk about that, but technology will continue to advance, right? I mean, what is human-centered today can increasingly be certainly digitized, right? Can expertise be digitized? Certainly, it can. If we think about Web 3.0 and the capabilities there, so I do think that if I understand it, I think the question is the assumption that it will only be big carriers and large tech distribution models, is that correct? Okay.
Yeah, sorry, can I just jump in here? Can everybody hear the gentleman? You can, fantastic.
Right.
So AI and that path aside, because that's a different question or a different path, that's a struggle I see the way it happens. Because there's a simple solution, right? I could be like, you know what? We're just going to raise your commission by 40%. You're going to do anything you want anyway. That's a super transactional relationship. And there's no long length for that, right? The short cycle decision. But in a world where we are we're codependent, what is in your relationship with that? I'm clearly not. That's kind of
Right, yeah.
How do you balance, how do you create a triple win situation? I think that's
Okay, Craig.
Yeah. And you're not going to let me answer the question with a question. I was trying to do that. So so that's complicated, right? But I do think, so it probably goes back to segments of business, right? So I mean, so that relationship wouldn't exist, I don't think, in all segments of business. But I do think it is a long-term reality as we think about, that human side of certainly distribution and that digital side. The question is, as more and more business flows from one to the other, or as more and more transactions go from one to the other, then what does that mean, right? What does that mean to that, I would call it certainly traditional carrier distribution connection? Because one of the questions is, if you look at the economic value of certainly distribution, it's not just new business, right? Because agencies lose money on new business, but they make it up in renewals, right? So there's this constant stream of income. In the type of relationship that you have, is it still economically viable, for some business to be serviced as it is today? Okay. If that makes sense.
Okay.
I'm at all zeros. If you'll be at Luke's, I'd love to talk about that.
I was going to say, continue the conversation at Luke's. But look, Craig, thank you so much for that and tackling that question. It was a real blindsider, so congratulations on filtering in the first place. But look, please do show your appreciation to Craig Welsh. Thank you so much. Excellent, thank you so much. Okay, so what we're going to do now is have the fireside chat. So let me just disabuse you of any notions you may have. I'm not putting logs on the grate. We don't have that. So just use your imagination. Imagine that a group of friends are sitting around the fireplace and we're talking distribution. What are we going to look at precisely? Well, we're going to look at the growth of D2C. Where is it going next? Also, whether COVID-19 was a catalyst for change, the benefits of the model for customers, and lessons that can be learned from the European market. So a lot to discuss, which is why I'd like you to give a very big warm welcome to my panelists, if you can join me on the stage. Ifti Kurtzner, please come and join me. And also Megan Duty. And Nilam Paharia, please come and join me. Come on, welcome them. Thank you. You guys are so slow to respond, when we clap. You're so animated at basketball matches and things, but look, it's good to see you all. I like to see lots of applause. Before we start, can you guys just introduce yourself briefly by telling the audience what it is that you do and for whom? So Ifti, first you.
Sure. I'm Ifti Kurtzner, co-founder and president of Kistera. Sorry for that reverb, some guys. We are the world's first insurance marketing operating system, which basically means we work with insurance providers. We have cloud-based, data-driven solution to run efficient and profitable marketing and distribution. So if anybody cares about marketing and distribution, I think Craig did a great build-up for Luke's tonight, but we'll be there right after you.
Right, what he's saying is he's splitting the cost of the drinks.
We're already paying a lot here. I'll call my CFO and another couple of drinks. No worries.
That's fair. And I'm Megan Duty, Vice President at Puritan Life. So we're a small, medium life and annuity carrier based in Scottsdale, Arizona. Also, of late, we've launched a direct-to-consumer annuity platform called Canvas. And so that's what I've been doing there several years.
Fantastic. And Neelam?
Neelam Paharia. I'm Director of Product Transformation from Allstate. And Allstate, as you all know, is one of top 5 carriers.
Never heard of them.
Personal lines.
No commercial rivalry here.
Personal lines majority, but we do have life and benefit annuity business as well. And we are one of those diversified distribution insurer. We have invested that as a key strategy. Personally, for me, I have been in industry for 25 years and have managed P&C business in all 3 channels, and this is great discussion. I'm looking forward to having that.
Fantastic. Well, look, it's great to see you all here. And a reminder as well, this is why you have to download the app to send in your questions. I'll try to put as many of those questions as we can to the panel before the end of the discussion, the fireside chat. No curveballs, please, to the gentleman in the pink shirt. You're never going to live this one down, are you? But look, let's crack on. A question to all of you. No hesitation, because if you hesitate, I'm going to choose somebody. But look, set the scene. How do you think the D2C trends have actually evolved in the past few years? Who would like to tackle that one first?
I'll tackle. I'll actually tackle and set the stage, and maybe if you take it from there. I would actually first start with especially the personal line side. We are in the business of consumer retail. We are in the business of consumer, right? And over last couple of years, maybe 2 decades, I would say, consumer retail has changed. Amazon, Apple, PayPal, Netflix. Think about that, how they have used and actually serviced consumer and changed the behavior. And so I would say insurance was no different. We are in the business of insurance and how we sell, and we have already heard that there are different experiences which are expected out of now insurance as well, because we are in the similar business to work with consumer. So that has been an evolution journey and not necessarily overnight journey. I think the other part which has also happened, which as consumers were going through all these transformation of their normal transaction, how the transaction can be done differently, their expectations out of all way of life and how the capabilities which had emerged, they also started filtering in their other behaviors as they were doing. They are, for example, the research, how consumer makes a decision and where they go to get research. They are not going to their mom or dad or a family to actually ask for advice. They are going to Google or YouTube or say TikTok. That's their platform of doing research. And that's where we have also seen that was an evolution where insurance also understood that's the place we have to go and advertise or acquire customer and show our presence. So I think that has been an evolution. Last 2 years, what has happened is a very different thing, and I would let Ifti actually talk about that.
First of all, thank you for bringing that up, because I did buy my insurance through TikTok, which I spend most of my time there. So I think it was a good decision. And there's a lot of talk about this D2C change and the digitalization. You know, all the conferences we go to talk about that. I think this is kind of a train that has left the station. And we're on a train. It's like we're on a horse carriage talking about, oh, the train's going to come by. The trains come by. I mean, we're all here on our phones. Some people on our phones while people talking. That's okay. That's what people do. People are on their phones. They buy on their phones. They shop on their phones. It is there. Direct to the future is direct to consumer is not the future of insurance. It is in future. I think it is the present. I think, Craig, you mentioned 60% are going to be buying direct. I mean, it's what's going on. It is the future. It is the majority. It is now. It is the present. And I think the more we can more quickly adapt to this and understand that there are new strategies, because this is already happening. Do not plan for the future. Do not plan for 3 years from now, for 5 years from now, although sometimes carriers have slow processes. I don't know if anybody here is from a carrier or has ever worked with a carrier. It may be slow. It's okay. It can take more than a week or a couple of months. But you get the ball rolling, right? You get it rolling today, yesterday, tomorrow. Everybody that's here understands this, right? Insurance innovation is the same as saying digital, is the same as saying direct to consumer, it's the same as saying power to the consumer and power to the carrier. I think that is what this session is about, if I can kind of talk about it. Direct to consumer is about bringing the power to the hand of the carrier, bringing the power to the hands of the customer, and making everybody smarter and better in the process.
Right, okay, Megan.
100%, I agree with you. I think as direct-to-consumer was evolving in other industries, insurance was a bit of a holdout. We said our back-end systems are legacy systems, we can't make it work, our products are complex, we'll never be able to do it. And customers have made it very clear that their expectations for insurance are no different than anything else. They want to buy it on TikTok. Right. They want to be able to research through Google. And so carriers have had to rise to meet that call. Distribution has had to rise to meet that call because their expectations are not different and they're not changing. The time is now, it is here. We're not planning for it, we are doing it.
Exactly.
I mean, look, let me throw something in here because, okay, I don't work in the sector, but when I've spoken to carriers in the past, they've all said, yeah, COVID-19 was a huge catalyst for change. It wasn't the exclusive catalyst, surely, because let's be honest, TikTok, Google, Facebook, they were all there before COVID.
Yep, 100%.
I want to add one thing to that, because everybody's talking about the way that COVID has changed customer behavior, right? Everybody's going online, direct to consumer, and people are shopping more online, e-com and that kind of stuff. I think that's kind of trivial. We've been talking about that for 2 years. Let's talk about specifics in insurance, why this has been unique for insurance. And let's leave the customers to one side and talk about the carriers. What COVID-19 has caused the carriers is profitability issues. Nobody's talking about that. Everybody's talking about people are more on their phones, shopping on their phones. Right, but what happened on the carrier side? I'm talking about from the auto insurance aspect, which we are mostly working in, is profitability rates, came down, loss ratios came up, combined ratios came down. Carriers are less and less profitable, and that's causing the change, right? So it's like a double-edged sword. Consumers are more online, and carriers need to change things to be more profitable.
So basically, it forced the carriers to look at the numbers.
Exactly, and to be willing to adopt new technology, because they spoke about it starting with people and humans. Humans start caring when their pocket hurts, right? That's when they started getting those meetings that say, wait a minute, we've been postponing this for years. Maybe now let's check about new technology.
I've struck gold on this. Go on.
Yeah. So since you talked about auto, so let me actually also preface, COVID was our largest human experiment, which was forced on us, right? As I said, this D2C trend or direct-to-consumer trend is not new. Everyone, Progressive and Geico has been in this industry for long. If you think that model is new, then we are kidding ourselves, right? And Allstate has been in this business of direct-to-business for more than 20 years ourselves. First it was our brand, and then we acquired Esurance at that point. I think what changed in last 2 years is that experiment which was done on everyone, from employee to agent to consumer, where everyone was forced to adapt and adopt new technology to just function, to deliver what they needed to deliver in the way of life. And that was not a short experiment that 3 days and then you can go back to your old life. It was a 2-year thing, which changed behavior, which also helped people to understand how to use technology more efficiently. It gave time to make it more effective for the purposes of doing business. Even the stakeholders who had wrong notion that technology was, that they were trying to be defensive because technology will hurt their old way of doing, rather than now being in that side of the house, agents found, because now they can't get their staff in office to do all those calls, that virtual setup actually makes many out of them, lets them hire new staff across a larger area, which is always, if you hear any agent model, hiring the staff and training the staff and leveraging them for different specialized skills has always been a challenge. And in 2 years, they found they could do it. And they could do it so effectively that customer did not realize what they were missing. In fact, many of the agent net satisfaction scores actually increased. So that's where you actually pull these two models together, and this experiment really helped.
I just have one question to Alam. Is the experiment over? Because it's been, it's been too long.
I think it's trickling down.
Go there.
Megan. Super quickly, let's call COVID an accelerator, not a driver.
Exactly.
Right.
So in our experience at Puritan Life, our platform wasn't new, direct-to-consumer isn't new. Canvas was actually a pilot slated for 2020. But we quickly pivoted when our agents couldn't get into people's homes to sell our agent-distributed product, and made it a full product launch that year. So it didn't drive our change, but it was an accelerator, for sure.
Megan, stay with me on this, and I also want to get Ifti's response. But look, to what extent are the insurtechs themselves actually shaping the D2C agenda?
Yeah, absolutely. I think there's 3 ways we see them. I'll talk about the way that we're modeled first. So we are a carrier, for all intents and purposes, running an insurtech in Canvas. You see the reverse of that. You see insurtechs who have reverse engineered and bought carriers, bought licenses. Now they're the carrier as well. And then you see the partnership where you've got the insurtechs with the capabilities and the innovation and the, let's be real, better execution than a lot of legacy insurers, partnering with the insurers who have the infrastructure, the institutional knowledge, the staff to get things done in that way as well.
Well, I have to say it's a myth. I mean, people talk about insurtechs changing the world, and a lot of people talk about it once again every conference. We talk about the things that companies were trying to swallow too much, too fast, right? You got to make it digestible change. I think Craig was referring to that as well, right? Make it small, bite size. I think it's a myth because, you know, many years have passed, maybe 5, 6, 7, 10 years for some of these insurtechs. We all seen no dramatic real effect on the industry because they were trying to do too much, and a lot of them were focusing on claims, on policy management, on ratings. Not enough of them, which is the world that kind of we come from, we're focusing on distribution, we're focusing on marketing. If we go out here and we see, I haven't been able to see all the booths, but 90% of the companies here, I'm talking about vendors, will talk about we have this new amazing technology for rating, for policy management, for claims. Where is the technology for marketing and distribution, right? We see these insurtechs coming up. A lot of them are publicly traded. I have nothing to say about that. I mean, I don't want to go there. You guys see this by yourselves, right? The promise wasn't really there. The idea is good. The execution is good. It's a little bit too much to swallow, but not enough of them were focusing on, okay, I have this great new amazing models. I have satellites over whatever doing something, right? How do I acquire customers in a way that I make money? And sorry making every one of my answers about profitability, but this is a business conference about business. And what my dad taught me about business is you have to make money at some point. Okay, it could take some years, but at some point make money, be profitable, and that's kind of what has yet to be proven by some of these new models.
Oh, that's interesting because traditionally, or well, if not traditionally, we see that there's some kind of rivalry between the old and the new, the upstarts, the young Turks on the block. And of course, coming out of that, Neelam, is this question about how the larger traditional carriers can make sure they're not left behind. But if it's a myth, you ain't got anything to worry about.
So actually, I will say, we learned something very useful from InsurTech, even though many of them are not making money, and that's the business problem they have. But we learned, so as I said, the trend is not new. Everyone is doing it. We all were doing it in an incremental fashion. What InsurTech taught us is how does a really digitally savvy, if we had to start something new ground up, how will it look like? When you are customer-centric, what does customer-centric look like in insurance world? It is important. When you see it, you can do it, right? Yeah. And they showed us how it can be done. So that was important, and that also meant we had to think differently. We had to get different people who actually could think that way, or we had to train our people to go, and also the other part is how to do the agile way of developing things. How do you not only change things on the fly as you are going and incrementally testing the market, but then also have the capability to be nimble. And that has been the bigger problem for a traditional insurer for a long time, is being nimble, because we have...
So it's not so much the problem itself. We know how to tackle the problem. It's how quickly we can move.
Yeah, how part was really important. And some of that was challenging. InsurTech had to do it because first, they didn't have the legacy systems. Second, they didn't have a lot of that data which we rely on when we make decision. And we are very disciplined way how we do the decision. They use data differently because they didn't have a lot of it. So whatever they had to sort of source it from multiple places. And we realized, oh my God, we have all this data and we have much higher quality.
You're sitting on it.
Yeah. And how could we now leverage it and orchestrate in making something different for our customer?
Okay, let me jump in here because I want to bring Megan into the conversation. But look, we're talking about D2C. What are the benefits for the customer at the end of the day? And more to the point, are there any downsides to the positives? Because look, nothing in life is pain-free, not even this.
That's fair. That's fair. Some of the obvious benefits are, the convenience, the accessibility. You can, for Canvas in particular, you can buy an annuity on Christmas morning in your pajamas. Someone actually did. I don't know what they were wearing. It's an online application, but I imagined it was pajamas. It's control. You can research, you can source, you can make a choice that's best for you. And those are some of the really big upsides. Another thing is, in an annuity or with your auto rate, if you're cutting out some of the costs of actually issuing a policy, it's not just the distribution, not just the agent commission, then you can get a better rate or a cheaper premium on the P&C side. So that's a benefit as well. But on the flip side, we have to remember that direct-to-consumer is a relationship between the consumer and the carrier, and consumers are best served when the carrier takes that responsibility seriously. So they should be education-centric on the sales side. They should be offering world-class self-service on the customer service side. There's a lot of trust involved. You need to follow through, deliver what you say you're going to, have the right product for this experience, have a process that's easy to use. And so customers are best served when carriers take that seriously, and when they're not, it can be a little bit rough for a customer to navigate.
Okay, there is so much ground I would love to cover, but time is the enemy. We've had all sorts of problems with the clocks. But listen, Ifti, I want to put the final question to you. Okay, so if you could be brief but concise.
Always.
Of course. I mean, look, how do you think D2C actually enables better market segmentation and upselling opportunities?
Okay, so it's all about the data, right? Everybody's talking about it. It's about data. Data allows for personalization. When you do that, when you know what to offer to who, it makes it a better sale. I can make it as easier as that. The more you know about your customer, the better offering you could do. The more you know about what else they might be interested in, and then we can go into predictive models and all that interesting stuff that we could talk about at Luke's, and analytics, who everybody just celebrates talking about. But it is that thing. It's digging into that data, which direct-to-consumer allows you to know. Never in history have we ever known so much about our customers. That is in the carrier's hands. That is pure power that lays in the carrier's hands, and when we learn how to utilize it better, which is what we're trying to help carriers do, once you know how to do that better, you'll make smarter decisions, which will lead to more shopping from customers, more money, everybody's happy. We call it a triple win.
Absolutely, with or without the Christmas pajamas. But look, we're going to have to close down the discussion here. Unfortunately, and I know that I told you to send in your questions, again, because we are running so tight on time, I'm not able to field those questions to the panel. But Luke's is going to do really well on business tonight because you're all going to head in that direction. They're going to stand you for the drinks, so you can ask as many questions to them as you'd like. But don't forget as well, we're here all day, so I'm sure that they'll be more than happy to answer any queries, whatever, that you want to put to them. But if you can show your appreciation, because they have been an absolutely marvellous panel. Thank you so much.
Thank you.
Thank you, everybody.
Thank you. Thank you so much. I'm so sorry we've had to cut it short, but it's been fantastic. Because what we're going to do now is we are going to have another of our fireside chats. And what we're going to be doing is tackling the subject of APIs. So in other words, looking at everything from unlocking third-party data all the way through to digital integration into ecosystems and the future of open insurance. Big topics, aren't they? So let's get straight to it and meet our speakers. First up, Daniel Robinson. Daniel, please come and join me on the stage. Come on, show your appreciation. Chris Cargill, please take a seat. Keep it going, guys, keep it going. Fantastic, take a few. It's fantastic to see you guys. So look, thank you for joining us, and also hopefully, if time is generous, we can take those questions, but please do send them in anyway, and I will try my utmost to make sure that these guys work for their lunch. I promise you that. You don't get anything for free around here. But look, let's start up with you guys actually telling us what it is you do and for whom. First Daniel and then Chris.
Hi, so I'm Dan Robinson. I work for a company called Level. So we're a technology services company that provide the skills and the capability to implement lots of the cool stuff that we're talking about today. So we can help you, bring to life digitization, data, whatever challenges that you're facing.
Fantastic. And Chris?
Chris Cargill. I work for Nationwide Insurance. I lead commercial lines digital distribution. So that's integration with distribution platforms, as well as launch of embedded quoting opportunities.
Fantastic. Okay, let's get the conversation going now. Chris, the technology architecture, we talk a great deal about API, but what is a really successful API strategy? In other words, what is the ideal architecture to accommodate this?
So we started building our first quote API in commercial about 3 years ago, but it really started with our launch of Guidewire Policy Center to replace our core policy systems 7 years ago. So we've been on a journey, and we're still on that journey. So certainly that created the modern platform for us to launch APIs. But also, doing this at scale, we've learned involves documenting our processes, documenting Q&A. Every time that we've done a new integration, it's a lot of the same questions we found out we were getting as we did new integrations. So, documenting those processes allowed us to scale it. And we're now doing that to inform our build of a bind API and servicing API, other parts of the value chain that we're digitizing for agents.
Okay, and is that something that resonates with you, Daniel? And what are the sort of technological hurdles that carriers have to overcome to bring this into effect?
So I guess my background is kind of 20 years on the carrier side of insurance, and the problems that I face, some of the problems that I see across the industry, and that is even when an insurer has gone through a big platform transformation like a Guidewire, for example, there are still many other systems that exist there. So finding a way of separating some of the complexity effectively with an integration layer so that you can do the integrations once with one technology, with one team, and learn the lessons that Chris has mentioned is really important. Because in order to move fast, you need to kind of abstract yourself from some of the complexity that large carriers have.
Okay, but Chris, I mean, when you're building APIs, what does that expression "with openness in mind" mean to you?
For me, it's building something that's adaptable and transferable. Our quote API can certainly integrate with a standalone rating platform. We can embed it within an agency management system. It's also transferable within a user experience on a loan financing application. So it's building something that's, depending on use case, could pivot to any one of those.
Given the vastness of this architecture, and again, a question to both of you, but I'd like Daniel to tackle it first and then get the follow-up from Chris. What does collaboration with digital entrants look like in this space? We talk about collaboration, easier said than done.
Yeah, so if we boil it down to its simplest terms, API is really about agreeing how one party throws data and the other one catches it, and then they throw it back. It's actually pretty simple from a technology point of view. My experience says it's always the case the hardest bit is getting the people and the process bit working. So great example for me. So my background was with 300-year-old insurance company, Royal Sun Alliance. Every decision takes a long time, right? You start implementing something 3 years later, it's out of date. That kind of setup. When we were working with kind of insurtech type companies, what we had to do was build a firewall between the two and build a team of people that were capable of interacting in the way that the insurtech worked. Because we had to protect the insurtech and the relationships from the corporate antibodies that were trying to kill it the whole time, right? Because compliance have got a view, underwriting have got a view, and their views were probably set from their experience of the world today, not the future that you're aiming at. So recognize there's a massive cultural battle going on between I guess those more reserved in the company and those that really want to drive change. It really does need a different mindset.
Would you agree with that, Chris?
Yeah, absolutely. We've fortunately had buy-in to do business differently, but we've also still got a relatively small team supporting our integrations. So as of right now, we've done 10 quote API integrations. There are 30 more in our backlog that we could do, but we have to prioritize. So the factors for us are looking at what is the integration complexity or experience of the integration partner going to be like? Is this their first commercial lines integration? If so, we may not want to be their first time learning how to do it. What is the economic model? What does it cost us either upfront for the integration or ongoing maintenance costs? But then the biggest thing is a clear path to adoption and scale. So is the partner they're integrating with doing it because they have agents and customers that want to buy our products? Or are we there to help them build their customer base and trying to weave through all that and figure out the right moves to make? That's the challenge.
Well, it sounds a lot more straightforward than what you went through at your previous company.
I think it's straightforward if you get that kind of abstraction right and you build the right team of people to do this. So I see this even more now on the supplier side, but by far the hardest thing to do in getting these changes to happen is to find the right product owner from the business perspective. So that's the person from the business who owns the benefits case. They've got the authority and the autonomy to make decisions, and they can get on with it. Without that, it doesn't matter how great your technology team is. you're gonna stumble and it's gonna take a long time. Now that sounds simple, right? You draw that on a piece of paper, that sounds simple. But in a world where decisions get made by committee, where you're trying to prioritize a backlog or a stack of change, over a 12-month view, getting a decision to change tack and implement something different tomorrow or even today is a massive cultural shift.
Sounds a bit like the BBC, but Chris, how can incumbents actually play to their strengths in that sense?
So, I think part of what Daniel talked about is, having the structure in place to enable quick decision-making and product ownership. 3 years ago when I took this role, I've been with Nationwide 22 years, but 3 years in this spot, they sort of set us aside and said, you have funding and political cover, just go do stuff. And that was very strange in a place like Nationwide. I'd never experienced it before. So, having the leadership support and the funding, the foundation to do it, certainly part of it. Also looking at the products that we have in market. We're now at 5 API-enabled lines of business for commercial lines. So we've got things out there that people can buy and connect with for small commercial. But also just, incumbents have, Nationwide carries a brand, and it's can drive adoption. It's very chicken and egg that agents don't want technology until the carriers and markets products that they want are on there. Carriers don't want to be present until the agents are using technology. So we can help move the needle a little bit with agency adoption.
And Daniel, how do you think carriers can actually reduce the cost of integrating into ecosystems and at the same time bringing on new partners?
So I think that the first thing is to get the right technology in place. You need the foundation, if you like, which might be effectively an integration layer to provide that separation. You need the people, and the people that want to work quickly and in the right way, and that can manage the many different relationships you might have with third parties. But I think the other thing is you need a mindset that says, this is never done. There isn't an end game here. It's continuously evolving. And to bring this to life, I think it takes 10 years roughly to get from kind of a leading edge idea to being absolutely the norm in the market. But you don't see it happening because it happens in small iterative changes. Look at your iPhone, couldn't even send picture messages when it first came out. Who'd have thought that would work? Same with cloud, so you've got to recognize it's a constantly evolving journey to get there.
Okay, and in the sense of that journey, Chris, how do you think that APIs can be used to help independent agents actually do more business?
To me, it's less about the APIs themselves, but more so what the APIs enable. So, you think about our quoting API that we've put out there and binding and servicing the other things we're looking to put in market. That's more about connecting the solutions that agents are using, because I don't care how good or not good any given carrier's tech stack is. When they bridge in, you're now doing something different for Nationwide and every other carrier that an agent works with. So to me, it's more about reducing clicks by integrating in unified applications, but also a consistent, predictable experience.
And following on from that, how do you think that the carriers themselves can actually scale up and at the same time adapt API integrations?
So for us, it was learning by doing. We didn't wait to build it until it was perfect and get it in market. Our first one we built in partnership with a distribution platform. Then we took it and said, is this transferable to another one? And then another one. And as I mentioned, we've got 10 in market now with 5 lines of business enabled. So for us, it was building out iteratively with a distribution partner. But then also, the documentation and everything that went along with it.
And pick an awesome technology partner to work with to help you do it.
Yes, exactly.
I mean, but Daniel, how do you think that insurers can monetize and actually profit from the API economy? We talk about it a lot, but where's the dough?
So I think we've talked a lot about customer focus in the early sessions. I think, for me, an API economy is just finding ways to help your customers better. So forget about the technical side of it. It's what is the proposition that you're trying to build and how do you do it? And I think, I think focusing on APIs is almost the wrong thing to do. It's kind of just an unseen enabler. What matters is that proposition.
Did you want to add to that? That's an interesting interpretation I've seen of the API, but it's there in the background.
Yeah, I mean, let's be honest, it's not that sexy. It's throwing data and services between 2 parties or 3 parties. the technology to do it has been here since computers were invented in the 40s. It's not new. What we're trying to do now is more interesting things with it that really tick a box for customers.
Yeah, stay with me on this, because look, what about the possibility of open insurance? I mean, what progress has there been so far, and what are the lessons that the insurance industry can actually draw from open finance?
So I think the best example of progress made for me is the Ping An case study that we saw earlier. I think they're the example of the company that's leading the way in doing this. And remember what I said about 10 years. So they were doing that kind of 2-3 years ago. If you're a carrier out there now, you've probably got 5 or 6 years left to catch up before this is norm. And I think the real power in this, I think, needs a change in mindset for insurers. We're talking about insurance. Yeah? This is an insurance conference. I don't think customers care about insurance. So if they're in the auto world, if you're in the auto world, I think customers care about mobility. They care about freedom. And insurance is just a very small part of that journey. I think in 10 years' time, we'll be at a mobility conference talking about auto insurance as a tiny part alongside charging and tyres and servicing. That, for me, is the direction of travel.
So that sort of huge holistic finance structure that the Chinese have developed effectively, but they referenced it at the very beginning.
But I think, absolutely. But we've got to turn the way we think on its head. We're thinking about insurance, and customers aren't. They're thinking about mobility.
Right.
And that's tough, because that means all of us need to change the way we think, the way we've built our careers, and the way we look at problems.
Good luck on that one, by the way. But I mean, look, let's look to the future. And again, it's a question to both of you. So if I can start first with Chris and then Daniel to get your response. I mean, look, there are so many opportunities presented by this open world. Is there anything or any one concept which has got you particularly excited, that there's something there which is like, hey, this really ticks all the right boxes, this is what we need to be looking at?
Yeah, you heard Bobby Joe mention it in the other session this morning. Nationwide wants to digitize the ordinary and humanize the extraordinary. So thinking of the efficiencies it creates to make, put people against processes that make a difference for customers. But I think the biggest thing for me is, we're building solutions that can connect to things that haven't even been developed yet. It makes us more adaptable. We can move with the speed and pace of market in a way that we've never been able to do before.
Mm-hmm. Daniel?
So we talked a lot about ecosystems there. You can hopefully get the sense that I'm really passionate about that. I think that really starts to solve customer problems in a way that we haven't done in the insurance industry before. But I guess what I'd say is we don't ever jump to that in one go. It starts by a carrier building a relationship with a charging network maybe, or having an app that connects the right services together. It doesn't happen in one go, but what I think is really exciting is understanding how humans work, how psychology works. It will be fear of missing out that will drive carriers to act in this market to change, because it's very difficult to change unless the platform is burning. It isn't burning at the moment because most carriers are making good money, but that fear of missing out, seeing things like the Ping An case study and seeing open banking start to get traction, I think will be the thing that pushes this on.
Okay then. We've got time for a question from the audience, so whoever submitted it, thank you very much. It's actually for Chris, but Daniel, if you want to add to that, do feel free. How was APIs, or how have APIs changed the overall integration experience for your customers/partners? Maybe a couple of examples?
So, I think my specific swim lane of commercial distribution platforms, we're still in the very early stages of adoption. You look to the personal line side of the house, most of the business written today with Nationwide is through a comparative rater. So I think we're moving as the market adapts. We're not present on every platform that's out there. We don't intend to be. So we're trying to make strategic bets as agents adopt. But I think probably our presence on some of the different platforms have driven adoption toward those platforms. So trying to find the right balance there is what we've been focused on.
Okay.
And if I can just give an example in the kind of the more specialist, more commercial world. So we're working with a number of partners who still very much use email, Excel, and even paper in some cases as part of the underwriting process. So we're a long way off ecosystems here, but actually there's a huge amount of value in building for them even simple solutions which allow some of those things to be automated. So instead of an underwriter spending their time manually inputting data or checking spreadsheets, what they're doing is looking at the edge cases that the automation couldn't pick up and validate with external data. And they're spending time underwriting, not typing. That's where actually, probably not quite as sexy as an ecosystem, but there are real tangible benefits you can get to really quickly if you focus on the right problems.
Okay, and there we have to close it, but thank you so much for this really fascinating discussion. And again, thank you to the audience. I'm so sorry we couldn't deal with all of the questions, but I did speak to these guys before we got together, and they said there's a huge tab at Luke's, and in fact there's the massive tabs around the bars on the streets which they have very kindly underwritten, so there's absolutely no excuse why you can't go drinking tonight and follow up these questions. Isn't that right? You're so generous.
Well, yeah, we bought some good reinsurance cover for that though.
Well, so fantastic. Well, they're very thirsty. They've travelled a long way to be here.
Absolutely.
Thank you so much, guys. It's been brilliant. Thank you so much. Now, we've been so lucky because we've had some amazing speakers. Earlier this morning, we had the keynote addresses. We had another keynote address as well, and it's kept everybody buzzing. So we are going to have another one of our fireside discussions. What we're doing now is grabbing a microphone so that we can actually amplify the sound on one of our panelists. But look, whilst we're actually preparing them, let me give you an idea about this discussion. It is the final discussion of this part of the session. The theme of it is a new era of distribution, preparing for rapid change. A lot is happening in this space because obviously you guys know a lot more about it than I do, but certainly as the outsider looking in, it is fascinating just hearing what is going on, what you are doing behind the scenes, because at the end of the day, it's people like me, the customer, we count, and you have to make our experience a lot smoother, less traumatic, and you are doing a great job. So thank you for sharing this, not just amongst yourselves, but also for bringing me in on the conversation. I do appreciate that. So let's move on now to meet the members of our panel. Michael Deguster, please come and join me. Also, Daniel Travinson, come on guys, come on, applaud them. I have never known an audience as shy as this to share their applause. Also, Steve Robinson, come and join us. And Mike Donner, please. Come on up, gentlemen, you are all welcome. Okay, so thank you so much for being here. And what we're going to do is start with some general introductions. I think you know the drill, but Michael Deguster, if you could start by just telling the audience what it is that you do and for whom.
Sure. I'm the general manager of Clarion Door, which is now a Xywave company, and we're a cloud software provider of a distribution platform, so it's a rate, quote, bind, issue, UI or API, and we also provide commercial comparative raters who also consume a lot of APIs as well.
Okay, fantastic. And then Daniel.
Yep, great. Daniel Chavinson. I head up the strategy and corporate development team for CoverGenius. CoverGenius is the insurtech for embedded distribution. We have built a platform we call Xcover that allows the world's largest e-commerce platforms, you can think of eBay, Booking.com, Amazon, Intuit, to offer their customers an insurance solution globally at time of transaction. It's a fully embedded model, and we're focused on distribution.
You're busy, in other words.
Apparently, yeah. We are the hot topic these days.
Not as busy as you.
Yeah, that's true. That's true. I'm not going to argue with that. Steve.
So Steve Robinson, I lead distribution at Bestow Life Insurance, and we are kind of a technology and insurance company focusing on instant decision term life insurance. We have a motto around our home office that we want to make hard things easy, and we think it should be easy to buy $1 million of term life insurance for most Americans. On a personal note, I'm on a mission to make the life insurance industry cool. So when I'm at industry functions or at dinner with my wife and friends, that they want to talk about what I do for a living.
Okay, that sounds pretty good. It's a wonderful aspiration to have, and I wish you
We
luck
all
on
have to
that.
have goals, right?
Absolutely, yes. However impossible they may seem, there's no harm trying. And Mike.
Well, thank you. So Mike Donner, I'm head of digital distribution for CNA Insurance. So when Chris introduced himself from Nationwide, that's pretty much my background too. I haven't been at CNA as long as Chris has at Nationwide, but started in the role about 3 years ago, and so do a lot of the same things that Chris does. I work with our API platform partners and talk about our strategy for moving forward. So excited to be here with you today.
Fantastic. And look, gentlemen, we really appreciate the fact that you've taken time out of your schedules to be here. So thank you for that. Also to the audience, we managed to squeeze in a question the last time, and I'm determined we're going to squeeze in a few more. So please use that app. Get your questions ready. These guys can handle it. They had steak for breakfast. They can handle anything. So look, let's get to it all. So look, a question to all of you. Let's talk about the key market trends that are happening. What are the main forces that are shaping insurance distribution in 2022? We'll start first from here and then move it all the way around.
Sure. The big thing I always think of is just complexity. There's just such a boom in complexity of everything that everybody's having to deal with, right? From data, so many different data providers, so many different data sources we're supposed to tackle, APIs, different kinds of distribution platforms, different kind of entities, right? MGAs, fronting carriers, new kinds of relationships. Just a much more complicated world in insurance than it was even last year, more or less 10 years ago.
Okay.
Yeah, I mean, we obviously think about embedded as kind of the focus on distribution. I think about embedded as a two-sided problem solver. You know, obviously the biggest, the most obvious reason why we should go embedded is that's where our customers are. You know, 70% of customers want an insurance offering when they're shopping with their favorite brands. And so I think meeting the customers where they are and giving them the ability to add on an insurance offering is incredibly compelling. I think we've proven that, you know, it is a successful distribution model from the customer's perspective by NPS scores of 60 plus, which is you know, far superior than what the industry has seen in the past. I do think that part of the evolution of distribution is, though, partnering with the carrier. I mean, I'm extremely passionate about reducing the expense and the cost associated with distribution of insurance products. And I think embedded is kind of that next step in the evolution to kind of continue to compress the distribution costs and reduce the overhead of transactioning a single insurance policy, which again, I think is value add for everybody in the value chain and everybody in the ecosystem. And so certainly I think by compressing the costs, we're going to push the distribution pace of change forward.
Okay, Steve.
Digitize this industry. Everything that we do is old school. Life insurance companies are doing paper applications. We're getting blood draws. We're going around the entire process to do it and make it simple. If we digitize the entire journey beginning to end for the consumer, for the agent, for the carrier, I think that's the win. That's our challenge.
Okay, Mike.
Yeah, I think so. Distribution and insurance from a carrier perspective is, you know, it's always evolving and changing, and now it's evolving so rapidly that I think one of the challenges that we have and that we have to tackle and face is, you know, where do we go and what do we, you know, what distribution avenues are we willing to go after, and which ones do we feel like are going to be successful, and which ones do we maybe need to stay away from, because there's so much out there. And as a carrier, you still want to have value in the products that you sell, and the more digitized it gets, sometimes it gets a little bit harder to create that value proposition, so you have to work even harder to figure out how to make that happen.
And as part of that evolution process, you're seeing more entrants moving into the distribution space. So again, a question to all of you, starting first with Daniel. Do you see these entrants as threats, or are they potential partners?
No, I certainly do not view them as threats. I mean, I think that there's a part of the journey that everybody must participate in. I certainly think that, you know, we need the carriers to provide the capacity, and we need to partner with the carriers as a distribution engine, you know, making sure that we have the right products priced at the right aspect. I mean, that is certainly the most important component of a sustainable distribution model. And I certainly think that on the distribution partner side, the OEMs, et cetera, we need them, as they're the ones that are bringing the eyeballs. I mean, they're the ones that are bringing the customers to the table and offering them a service or a product that they're interested in purchasing. And then we can be there as the distribution engine to surface and distribute the insurance product. And so I definitely do not think that there are any threats in this ecosystem. I think that we all need to kind of partner together and understand the roles that each of us must play in this transaction, and understand what we are all good at, partner together, and I think we can create ultimately a much better customer experience. And I think that is what we're all after here. And so I think we just the important piece is a partnership, in my opinion.
Okay, and Michael.
Yeah, I agree with that. I mean, it's such an enormous industry that if you're viewing somebody as a threat, I mean, it's just, you're kind of wasting your time, right? There's so much opportunity, there's so much pie to go around. It's much wiser, just from an odds perspective, to approach everybody as a potential partner rather than as a potential threat.
Okay, Mike.
Yeah, so I think, you know, definitely would agree with that. And from a carrier perspective, We definitely look at the insurtech space as people to partner with. It's still incredibly hard, in my opinion, to build a profitable personal lines or commercial or life insurance product. So there's not that many, I don't think, insurtechs out there that could create their own product. So they still need us as a carrier. So for us, it's about finding the ways to partner with them and then help them be successful in what they're trying to do as startups, while then helping us drive better growth as well. So.
And Steve, do you share the love?
For me, this is a split personality question because Bestow is a digital provider of term life insurance, and we are kind of a group that's reselling another carrier's product, leveraging our platform. But at the same time, last year we created and launched our own life insurance company. So I'm on both sides of the fence. So I don't want the distribution to be added, but at the same time, I want to welcome myself and my new company. So I think there's an opportunity, and to your point, that the pie is enormous, and there's plenty of space for all of us here as long as we're moving forward in a positive way.
Michael, let me take it back to you. I mean, what do you see as the key things that should be taken into consideration when you're trying to be an attractive partner for digital brands and big tech? The beauty queen element, I guess.
I mean, I think the word that always comes to my mind and that question is flexibility. Right, which is not something that the industry is famous for, right, both from a business perspective and from a technology perspective, right? It's like, hey, even as we automate things, we tended to automate things the same way as they were done before. And a lot of these new partners, they're trying to bring something new to the table, right, and do something that's slightly different, right? And the flexibility both of the people and of the technology to be able to enable things that you wouldn't have thought of, because that's where you're talking to them, is, I think, a real key trait to try and embrace.
Okay, let's kind of move along as well. I guess that this question will also incorporate it to a certain extent. Daniel, it's for you, because I want to look at new distribution channels, particularly embedded insurance. That's one of these buzz things, which is really good, everybody talking. But why are we seeing such strong growth in that particular area? And what is it that insurers need to do if they're going to take advantage of that?
Yeah, I mean, I kind of alluding to what I mentioned previously, I think the embedded distribution model is just value creator for everybody in the ecosystem. And so I think that what we're able to do is, again, achieve pretty material reductions in the expenses in the distribution model. And that should be really attractive to our carrier partners, and that's what we're out seeking. I think when we meet the customer at the time of transaction, so if we are embedded into a Booking.com or we're embedded into an eBay or an Intuit, then we can utilize all of the information that is available at that partner distribution channel, or that, so that e-commerce platform that they have on their customer. And so I think that just simply pulling through a lot of that information and using it to underwrite, using it to complete first notices of losses, or using it to pay claims, I think what we are doing is we are eliminating a lot of the cumbersome administrative work that is typically necessary in distribution, and we are digitizing it. And I think that the result of digitization, in my opinion, and is, again, I hate to beat a dead horse here, but is reduction in expenses. And I think that if we could be flexible, meet with our carrier partners, and say, here, our goal here is to write profitable business. Our goal is to build a profitable book of insurance, but we want to do it in a lower cost, much more efficient methodology. For us, that is the ultimate goal, and why I think embedded is becoming so popular, because it works, right? Yeah. It really cuts out on unnecessary costs.
Okay, let's stay with embedded insurance. Steve, take this with me, because take this, because look, how is this going to impact the carrier-customer relationship? How is it going to evolve? And do you not think that perhaps carriers should be worried about potentially losing control of that relationship, bearing in mind that previously we were talking about empowerment not just for the carrier, but also for the customer as well?
Yeah, that's a lot. I would say we're putting the consumer in control, not necessarily the agent or anything, but letting the consumer drive that journey is a big part of what we're doing. And I think having embedded solutions where you are on the site of your bank and you can buy insurance or whatever investment product is there. The bank loves that because you're not pivoting away from the site they're on. They've spent a lot of money to get you there. They don't want you to leave. Well, I'd like you to buy my product while you're there. So if I can embed that, it can be as simple as an iframe solution. It can be as involved as a complete enrollment API. It just depends on where their interest is across that journey. But I think partnership together to find a way to make that work is a big strategy for all of us. And making sure that you find a way to incorporate the agent, because we often want to say we can go direct to consumers. I heard on the previous panel, one of the 2 Fireside Chats, and it's a small % of people. In the life insurance industry, if you look at all the sales, about 89% of them involve an agent in one way or another. It could be digital or virtual, but that small portion of people that go to the web to buy coverage, they go to get a good rate. They go to do a lot of their homework. But today, they're still not buying as much as we all think they are. Having an agent involved in that sale in one way or another works. And again, it doesn't have to be me sitting across from the table and making that sale with you old school. It could be in a digital aspect. It can be on that website by a trusted partner and friend. And I think that's where the whole concept of digital and technology really resonates.
Okay, I'm going to throw this question out to all of you, but Mike, if you can deal with it first, and then we'll move it amongst the rest of the panel. It is this point about embedded insurance in terms of the potential threat that it poses. Is it the biggest threat facing insurers? Should they be afraid, or just say, no, use it, work with it?
I think for me, the challenge depends on the product line, right? So in personal lines, it's a lot easier than it is in commercial lines. So I think when we look at it, because we're only a commercial carrier, and when we look at embedded from a commercial perspective, the challenge becomes the more complex the business is, the more questions you have to ask from an underwriting perspective. And in the embedded journey, the customer wants it to be simple, they want it to be easy, and they don't want to have to answer a bunch of other underwriting or other questions to be able to get the quote for their insurance after they've signed up for a new bank account or whatever they've done. So I think looking at ways to use third-party data and that kind of stuff becomes very important. But again, I think the embedded journey for commercial is growing slower than it is in personal lines and some other, especially when you get into the more complex commercial products, like a monoline GL only is probably pretty easy to do, but when you're talking about doing something in the package space, it's very challenging.
Okay, Michael.
Yeah, I mean, I think that to me, embedded sort of, we talk about meeting the customer where they are, right? And embedded is just one form of that, kind of the extreme form. But all along the way, the sort of customer's goal, I think, is, not to deal with insurance more than they absolutely have to, right? If they want to answer as few questions, spend as little time thinking about it as they can. I mean, I'm in the insurance business. I hate thinking about our insurance policies, et cetera, et cetera. And embedded is just the sort of peak form of that. But whatever kind of insurance you're selling, whatever your model is, I think you're on that journey to say, hey, how can we make it as easy as possible for every consumer? In some cases, it's going to be embedded. In some cases, it's going to be, hey, this is really dialed down because it's only for nail salons, and we've got that. It may not be embedded, but it's still simplified. So it's one journey, even if you don't get all the way to embedded, I think.
Okay, Daniel.
I mean, I couldn't agree more. I definitely, don't think that embedded is a huge threat, obviously. I think it is a way for us, again, to partner together. And I agree with what Michael was saying, is that I think it takes a little bit of nuance to understand what products should be sold through an agent, what products should be sold in an embedded way. But I think that if we all sit down as experienced insurance professionals and all have the same mindset of we want to improve the customer experience, we want to make this a good model, then I think embedded is certainly a great opportunity in a number of different lines. We had a tremendous amount of success in the personal line space, obviously, but we have a really good understanding of the commercial line space too, and have plans to bring it there. And I think, again, I'm not saying that it is every customer in every line of commercial insurance, but I am a huge believer that there's opportunity to bring embedded distribution to the commercial line space. We are a global organization, so we certainly don't stop in the U.S. It's a big growth engine for Cover Genius, but we're a global organization, and so the commercial lines aspect can go, very, very broad, and we can dial into specific products.
Okay, and Steve.
I would say it really depends on the target customer. Some folks are going to do a simple, easy transactional sale, and it makes a lot of sense to do the embedded solution. Yep. Some are going to be a bit more complicated, and we might find a different way. I don't think we want to go back to old school paper. We'll find another digital way to do it.
Nothing wrong with paper. Someone's got to defend it.
I don't know about that. But I think it has to be different than what it has been in the past, and I think embedded is a big part of that, and it really depends on the customer and the product that you're selling.
And Mike, are incumbent insurers perhaps well placed to take advantage of the new distribution models and channels, or is it the old agility? gets worked into it?
I think carriers we're still kind of struggling some with the digital space. It's different. We had a lot of control over how things were quoted in the past, and you lose that moving into the digital world. So it's about how do you get people comfortable with how the transaction is done and what information you're able to get or what information you're not able to get. And so I think, a lot of carriers been very slow to adopt this new channel. Insurance carriers in general tend to be kind of slow to adopt new things. But I think the cool part is that a lot of the insurtechs that are popping up are really helping us understand where the value is, how we can do it, easier, how we can make money at it, and how we can not lose, that underwriting ability that we still need, especially in the more complex insurance space.
Something I'm going to throw out to all of you, so it doesn't really matter who starts on this first, but look, let's look at the underlying business architecture. What is needed to thrive in an era of digital distribution? Clearly there are obstacles. What are they, the ones that you've identified? And more to the point, how can you actually kick them into the rough if you're going to survive and grow, be out there? Who wants to tackle that? Steve.
I would just jump in, and I know this is going to go a lot of directions, but adoption. I mean, you can build the greatest technology, but if the consumer and your partners are not going to adopt that technology, it makes it really challenging. And a big part of that also is education. If you ask someone that is 60 years old to apply for this coverage, and you present them with an application that's 70% completed because you get all this information with the proper disclosures, they're going to say, how did you get this? And the conversation is going to be, how did you get my information? If you give that same journey to someone that's 30 years old and ask them to fill out that application, they're going to say, go get that information on your own. It's all publicly available. Who is your customer? What's their thought process? And you have to think through that. That's a big part of the challenge is, balancing that out.
Okay, and Daniel. Oh, sorry, Michael.
I was going to say, I think another thing, the theme of the day is APIs, right, that we don't know what's coming, right? And I think one of the things we're espoused at Clarion Door is APIs first. Like a lot of people nowadays are trying to tack the APIs onto their existing system, right? And they tend to build APIs for very specific things, right? This is how you quote, right? This is how you issue a policy, right? And it doesn't provide long-run flexibility for what might come later, right? Hey, that bank that wants to embed it only knows these things, right? And they want to do this much, but not that much, or they want to do everything, right? So to really say, hey, we don't know what's going to come down the road, so every single thing we do from this point forward should have an API first, and even our own internal UI that we may use for our underwriters should be built on that same set of APIs, right? So we can expose out whatever we want to whatever trusted partner we can, right? Is really, I think, a big thing because it's never ending, as one of the folks said earlier. It's going to go on forever, and to really think API first, I think it's very important for the long run.
Daniel. Sorry.
Go ahead, Mike.
Go ahead, Daniel.
I think that having the necessary data is the most important thing. And I think when we think about embedded, I don't think we are approaching our carrier partners and saying, hey, forget about the underwriting, forget about the data, let's just blindly quote and bind deals. I think we are just saying the data is coming from a different source, and maybe we can supplement that data, and at the end of the day, you're actually aggregating or you're having access to far more underwriting variables and far more information on the risk than you were in the past. And again, we're just cutting out this engagement with the customer that's just all costing us money unnecessarily. And so I think it's about just shifting where we're collecting the data or how we're collecting the data, doing that in an embedded fashion, pulling through that information, and then making sure that we are, building a profitable book of business together based on that information.
Mm-hmm. And did you want to add anything to that, Mike?
Just real quick, I mean, just from an architecture standpoint, our chief enterprise architect is in the room, so I better be careful what I say. But I think we have to, as carriers, leverage our partners who can help us do things more effectively and probably less for less cost than we can do things on our own sometimes. So that's another shift for insurance carriers, right? Having the control of all that on your own, as opposed to looking for partners that can help you do it and do it more efficiently. So.
Okay then. I mean, look, we heard a great deal about the D2C model. It came up in the last conversation. But give me your thoughts on this. Will it be the biggest shake-up in the next few years? Let's work our way down. So Mike, then Steve, then Daniel, then Michael.
I think definitely. I mean, we're seeing more and more of our large brokers that want to have some kind of quoting platform where they can allow the customers to at least start the journey on their own. So, ultimately the agency gets involved at some point to either issue the policy or answer questions or add coverages. but they want the customer to be able to start that on their own. And I think where that D2C experience is helpful is that it helps them reduce cost, and then it gets them more interested in writing that business, especially when you're talking about the small commercial space. So I think definitely D2C is the wave of the future, including commercial insurance. Is a little bit farther behind, but it's getting there quickly.
Okay, Steve.
I'd say why can't we all get along? Why can't there be a D2C journey that's powered by an agent? Why can't we help the agents that are talking to these customers where the relationships exist? Let's digitize those folks. Let's make them a part of this journey. So if it's a co-branded site that's powered by them, if it's an embedded solution where they're the agent behind that, then we have that partnership. Because if we just go 100% D2C, one, we're going to spend a whole lot of money, and it's expensive to get customers in a D2C market, and you may not make any money. But if we have that agent with a trusted relationship that's a part of the journey, I think it's going to be a win to blend those together. So I don't think it's an either or. I think let's just all figure a way to do it together.
Okay, and Daniel.
I definitely agree with that. I think the industry has proven that the D2C model is viable, or it's possible, but it is expensive. And I think that if we're all competing against each other in a D2C model, we will be burning a lot of other people's money, probably.
No one has made any money, and we've spent a lot of effort, right?
No. I mean, AdWords alone and SEM is just overly expensive. So I think there's an omni-channel approach that is probably the one that will win out on that. But certainly we believe that the embedded distribution model can be one of those aspects, and it's about meeting the customer where they are, right, and reducing that those customer acquisition costs, and I think just by providing them a service on the platform, the e-commerce platform that they are already shopping on, is certainly an efficient way to kind of bring customers to the door and serve them appropriately.
Yeah. Michael.
Yeah, I think that the reason it's a big trend is because, especially as the generations pass here, the default expectation of people is to be able to do everything online, right, and be able to do it directly. And they may not know, right, that they can't do this online because, hey, I decided to become a welder, and I'm not going to get instant click insurance for being a welder, right? But and that's why you need to have that experience because, hey, at least want to start online, I'm going to go to the place that gives me the appearance that I can do this direct, and then I'm going to get kicked to the agent, but at least I've had that experience, I've met with the customer at, because no one wants to talk to anyone anymore, right? Younger kids. So I think that the direct consumer is going to be a thing, right? It's just about how far it goes for a given kind of insurance and situation.
Okay, we've got time for a couple more questions, including a question from the audience, but question from me to all of you. Is there a future for aggregators in the US market? Mike, would you like to start that?
Sure. Sure.
You were looking at me so pleadingly.
I definitely think so. I think the aggregator model has a lot of value in the agency space. They can provide market access. They can do a lot of things for smaller independent agencies that they struggle to do on their own. So I definitely think that the aggregator space is viable in the future. And as carriers, for the most part, we really enjoy working with those aggregators because, again, they can help sell our value proposition to all of their member agencies. And generally, we have a really good experience with them. So
Great. Steve?
I absolutely do. I mean, an aggregator, it creates a marketplace. And it's like Walmart. We don't all want to say that we go to Walmart, but it's important to have your product on the shelf of Walmart because there's a lot of consumers there. An aggregator is a big Walmart, free commercial there for Walmart here today. But it's a big box store, and it's important to be there. Is that the only way that we're going to get coverage? Is the only way it's going to work? Absolutely not. It's one of many.
Okay then, Daniel.
Yeah, I mean, I certainly think that there's an opportunity for. I mean, we don't approach it in the aggregator model, and we won't. I think we like to kind of look at it more on kind of funneling to the right carrier. I mean, we have relationships with dozens of carriers across the world, and I think it's more about, again, partnering with the carrier to say, well, where is your appetite, and let's feed you that distribution in an efficient way, rather than kind of putting 4 or 5 carriers against each other. I think that our approach is to kind of build bespoke programs with carriers and kind of make sure that they're seeing the business that they want to see. Now, we can have multiple carriers on a single line of business, but making sure that they're getting the right appetite within the distribution model is kind of our focus.
Okay, and Michael.
Yeah, I think that's right. I mean, insurance is inherently a complicated world. There's just tons of different kinds of insurance, tons of different kinds of insurers, tons of different appetite, et cetera. So it's not, aggregators are providing a service beyond just a price comparison a lot of times, right, about placing this particular kind of business, this particular risk at a place. So I think they're here to stay.
Fantastic. Let's take one question now. Again, I don't really care who answers it. If there's any hesitation, I will select somebody. Do you see technology removing agents from the process of buying insurance? Daniel, you're looking at me.
I want to stand up and
All
shout
right,
the answer.
Go on. You've been spared. Go on, Steve.
I do not. I've said it before. I think it's collaboration. I think the agent is a part of it. People want advice. I'm going to go online and I'm going to do a lot of research, but did I make the right decision? They want that aspect of advice, and I think that's always going to be here in one way or another.
Okay.
I'm a big fan of everybody focusing on what they do best, and I think that there's like segmentation within this market that we can make more clear, so that brokers and agents are focused on the business that makes the most sense. That customer that does need the consultative approach should absolutely be served, in my opinion, by an agent or a broker. There needs to those could be mid-market or large enterprises or Fortune 500. Those need a much more in-depth consultative approach. But for personal lines or some smaller transactions that are happening at a much higher pace, then I think the broker agent is not spending their time wisely. And again, we're unnecessarily spending administrative costs on this distribution of those types of insurance policies. So I think we just all need to identify where our time is best spent, and then be experts in that space.
And just briefly, I think there's a structural reason for it too. People always think like, oh, the agents are here because they used to be here. But structurally speaking, you think about insurance. None of us in the real world think about insurance that often, right? There's no reason to become an expert at it. It's not your phone, right? It's inherently something you only deal with, even personal lines, very rarely. In commercial lines, almost never, right? When you start a business or have a big change. So there's no reason why you should invest the time to really become an expert on it, ever, right? And that's not going to change, no matter what the state of technology is.
Okay. Gentlemen, thank you so much. It has been a wonderful conversation. Thank you.
Thank you very much.